Insight and InfoDrive Analytics announced a JV backed by a $3 million investment to accelerate AI transformation across the Middle East. Will focus on building industry-specific agentic AI solutions. Student co-living platform WhoLive raises 24 crore rupees in a pre-Series A round led by Negan Capital. Investment will focus on expanding WhoLive's presence in non-metro cities through bed acquisitions, brand building initiatives, and further development of its proprietary property management platform.
Well, those were the headlines we are tracking for you this evening on What's Brewing Today. Mumbai-based quick commerce startup Zepto has raised close to $450 million in a mix of primary and secondary transactions, valuing the company at $7 billion. Now, the round marks the entry of California Public Employees Retirement System, one of the world's largest pension funds, alongside existing investors who've doubled down on their investments. To tell us what this fundraise means for Zepto's next phase of expansion, joining me now is Adit Palicha, the co-founder and CEO of Zepto. Adit, welcome to Startup Street. You've just raised close to $450 million in fresh funding, taking Zepto's valuation to $7 billion. You've doubled your valuation in less than a year from $3.6 billion in mid-2024 to $7 billion today. Adit, tell us, how significant is it to have a global name like CalPERS join the cap table? And can you break down how much of this funding is primary and secondary?
So firstly, it's wonderful to be here. Thanks for having me. And, it's a show that I enjoy as a viewer as well. So firstly, I think obviously this, financing has been, pretty significant milestone for the company. We're excited to, have all the names that you mentioned in your introduction. And I think from our lens, the focus is, we've been able to grow. The reason why we were able to get this financing done is because we've been able to grow from roughly around 500,000 orders per day in mid-2024 when we closed our last fundraise to about today 1.6 to 1.7 million orders per day. And even as we've grown the business close to 250% in the past 5 quarters, what we've been able to do, which I think is more important, is we've been able to consistently keep turning stores profitable. We've done hundreds of stores, incremental stores profitable even as we expanded. And so those are the foundations for this fundraise. And I think the last question you mentioned is on the amount that's primary or secondary. What I can tell you is that the vast majority of this $450 million is primary. And we're now in a position where we've got close to $1 billion of net cash in bank. So we're more than well capitalized to take the company through the next few years. So that's basically where we are right now.
Well, clearly you've got a lot of cash with you, Adit. But what's the roadmap for this capital? Will it go toward expanding dark stores, strengthening, tech and supply chain, or improving profitability metrics ahead of a potential IPO?
Look, I think the key verticals that we continue to invest in, one, obviously, we're launching a few hundred stores over the next 12 months. So we already have well over 1,000 stores today. We think we're going to add a few hundred more stores. Even though we're seeing pretty substantial growth even in existing cities, and we're going to keep doubling down there, we do plan to add a couple hundred more stores. That's one. The second piece is, we are obviously putting, capital behind acquiring new customers, which we've consistently done. So that we're doing over like a longer period of time. And more importantly, I think the bigger piece of clarity, or at least what we've realized, is that there's a lot of value that we can build technically in our business, right? A lot of intellectual property that we create in, supply chain product, automating financial processes, even on the consumer side with search or our advertising business. So there's a lot of, development work that we do there. So we're putting capital behind that. But at a principal level, Shruti, we're expecting to keep growing the business meaningfully quarter on quarter and keep improving bottom line quarter on quarter as well. And what we're hoping to do is to show investors, which at least right now seems like we're on a good track to do, to keep showing, bottom line improvement quarter on quarter, even as the business keeps growing.
Adit, we are in the middle of the festive season. What is Zepto's strategy to capture festive demand while keeping, delivery time, service quality, and margins intact?
Yeah, absolutely. So I think we've had a pretty successful festive season. Touch wood so far. It's been pretty dramatic. I think, for example, like some of the festivals that have already passed by, like Navratri or Ganesh Chaturthi or Raksha Bandhan,
yes,
right? We've seen growth between 100 to 200% in some of the key festive SKUs that serve as a barometer for this, right? So for example, Dandiya sticks or Rakhis, or let's say, day after tomorrow, Dhanteras, gold and silver coins, right? We've actually seen pretty ridiculous growth year on year in those categories. And the key, in specifically festive businesses or festive part of our revenue stream, the key there is selection, right? When a customer is buying a Rakhi or a Dandiya stick right before Navratri, for example, she's less sensitive about the price that she's getting. She's more sensitive about is every demand signal, every type of SKU that she wants available, and you have to do deep data work, looking at search trends, looking at trends on what consumers are browsing through on the app from years prior to really get a full signal of what potential demand points can we double down on. And so I think the key game in festive is selection. I think we've done a phenomenal job so far. It's reflecting in the growth. All the key festive SKUs are like 100 to 200% up year on year.
And finally, Adil, before I let you go, you've often said that the quick commerce story in India is still in its early innings. So tell us what's next for Zepto, in 2025, 2026, and, is it expansion, new categories, or maybe ringing the bell on Dalal Street? If you could also share what is Zepto's IPO timeline now, and how does this round feed into that roadmap?
Yeah, so we consider this financing a pre-IPO financing. We're not allowed to give exact timelines. There are some restrictions on being able to do that that we have to follow. But what I can tell you is you'll see very imminent news on next steps on that very soon on our public listing. So that's happening imminently. But what I can also tell you, I mean, from our perspective, we do think quick commerce is quite early. At least what we're seeing in our metrics is that we're going to have substantial growth. We already have grown from 2024 to 2025. In an explosive way. We think that growth is going to continue to be pretty rapid next year and for the next few years. So I think that this category is only 4 years old, right? Like 4 years ago, we had one dark store in Bandra, and we just raised a seed round, right? 4 years later, obviously, this category is massive, and we're all doing billions of dollars of sales. And so from my lens, I think over the next 12 months, you're going to keep seeing that number multiply. And I think over the next 4 or 5 years, we have to take this to a category that does tens of billions of dollars of sales consistently, and I think that's where all of us are heading. So that's our point of view. A lot more to come, over the next few years.
Well, we will surely keep a track of all of that on Startup Street. Arid, many thanks for joining us. Wish you the very best for all your growth plans.
Likewise. Thank you so much.
And on the hot seat today, India's new age entertainment startup Rusk Media has raised 103 crore rupees in a Series B round led by Ivy Cap Ventures with participation from LC Nuva, InfoEdge Ventures, Woody Venture Partners and others. The funding will power Rusk's global expansion and fuel the creation of new age Gen Z-focused entertainment IPs across digital and OTT platforms. Known for hits like Playground, Battleground and School Friends, Rusk has built a full-stack content ecosystem combining storytelling, technology and pop culture. With over 1 billion monthly views across platforms and a growing international audience, the company now plans to take its IPs to markets like the US, Europe and the Middle East, while strengthening its owned platforms Rumble and Alright TV. Joining me now to discuss this further is Mayank Yadav, the co-founder and CEO of Rusk Media. Mayank, thank you so much for joining us here on the show today. Let me begin by asking you, Rusk is known for Gen Z entertainment, right? So how do you sort of keep your content formats fresh and relevant for a constantly evolving young audience?
First of all, thank you for having me on the show. Really appreciate it. Over the last few years, we've been kind of focused on using data and insights from what Gen Z, even Gen Alpha is kind of consuming on Instagram, YouTube, everywhere else. So we try and funnel and understand what they're watching. So for example, during COVID, we realized people were watching a lot of gaming. Then we recently realized that, hey, the world has changed and moved to not just aspiring to sing playback, but create original music. So we try and look at white spaces, what this generation is already kind of consuming, and then make IPs out of that. Our strategy has always been that, look, while on TV, you did not have so much consumption data, so much personal data. Right now, because on mobile, you get so much on comments, shares, what people are watching, till where are they watching. So we just try and identify new trends day in, day out and try and create IPs on that.
Sure. You've raised this 103 crore rupees in a Series B round, right? So how will this fresh capital fuel Rusk Media's next phase of growth? Or what's on top of the agenda when it comes to fund allocation?
So we're we're pretty big in terms of creating IPs in India alone. And the good thing about our IPs, especially reality and unscripted and animation that we're creating from India, is that we can create from India for the world. That's a big part of the allocation that we're going to try and deploy, to say that India can create world-class pop culture and entertainment formats and IPs, and that can be consumed globally. That's number one on our agenda. Number two is the rise of just mobile consumption in India. So we would try and go direct to consumer through our own streaming platform called Outright TV, which will be focused on vertical dramas and micro episodic content.
And, you have this big push to expand globally, right? So what's the strategy behind expanding into the US, Europe, and MEA region? And what's the kind of global audience that you're targeting? And how different is it when it comes to, versus India?
So just think of it that way. Indians have always consumed formats like Big Boss, Fear Factor, so on and so forth, which have been conceived outside, not in India, but then are widely consumed in India. Gen Z is a generation which is very similar globally. So whatever formats that work in India can be recreated for global markets. So for example, a format called Battleground, which is about fitness and just living healthy, kind of works well across, I think, 80% of countries across the world. We want to combine the scalability of these formats and the creative talent that exists in India and produce in India for the world. So that will entail people flying in from whichever geography we're producing in, for example, the US or UK, producing in India and then exporting it back. So that's number one. And number two is producing world-class animation that everybody can consume from India for the world. So while the unscripted piece or the reality shows that we are going to produce are going to be created every time specifically for each new geography, animation is something that we are trying to export our culture from. So we're looking at picking up tales from our Indian mythology and presenting it in a way that almost akin to anime on how Japan has exported its culture. We are trying to export our Indian culture for the world.
So exporting our Indian culture for the world. But, if you could sort of tell us what's Rusk Media's revenue run rate currently, and what's the target that you've set for yourself for FY26? And also, if you could break up what the revenue mix will look like going into the future.
So over the last 3 years, we've almost grown 100% year on year. Last year, we did about 100 crores. This year, we're on track to do about 200 to 220 odd crores. The one thing that we've realized over our journey is that we want to build sustainably. So while we raise this capital, we are going to be profitable within this year and on track to do about 500 odd crores in FY27. Bulk of our growth is going to come from more number of IPs that we're going to produce in India. That's going to constitute about 60-70% of our revenues this year. 15-20% is already revenue generated in the US, and 10-15% is the new initiative of our vertical drama app. The latter two are going to grow more exponentially over the coming few years, while our existing India business is going to grow almost 50-60% year on year while being extremely profitable.
Sure. So 100% year-on-year growth and profitability within this year. You've also mentioned that AI-enabled production and data-led storytelling is central to, how it functions at Rusk's creative process, right? So can you tell us a little bit about your tech edge that you have going on?
There are two different components. One is, of course, how we use data to kind of create content. So right from ideation to how the scripts need to be made to what production process needs to be done is layered with our data systems, which combine everything from secondary data available across Instagram, Facebook, our own IPs, whatever data we capture on our own systems, and a very thorough primary research process. Which kind of sets us apart from just being a creative organization to using data to kind of enable our creative talent to create better and better and better and innovate a lot more. On the AI end, there are two segments. One is, of course, using AI. I think AI has become almost like Microsoft today, right? You've got to use it for anything that you're doing. So right from scripting to post-production to music to BGM, AI is layered across all our content creation process right now. And starting January, we're also going to be producing 60-minute films that would be 100% AI generated as well. So those are two different segments of how we're using technology to kind of improve our product. Um, I think that kind of answers your question.
Sure. And, with IPs like Playground, Battleground, and, School Friends performing strongly, which formats or shows are driving the highest traction for you today?
To be honest, you can't really ask me on to pick a best one amongst all our IPs. All of them do really, really well. What we've learned though is each of these IPs have a very strong cohort in which they've become extremely popular. Unlike television, where you only have a few slots to air, digital programming is extremely different and it appeals to different cohorts. The one thing that we want to kind of be very proud about is that most of our programming has gone into third, fourth, fifth editions. So our success rate is extremely, extremely high, and that's what's really important at the end of the day for a business like ours.
Sure. So all of them seeing good traction. But what's the long-term vision for All Right TV and your owned platforms? Could they sort of become full-fledged OTT destinations?
If you think about the vertical drama space right now, you would see a lot of players coming in and trying to own certain cohorts. At the end of the day, great IP is going to win in the next few years. What we believe in is that there needs to be a destination for Gen Z and younger female audiences, which are not yet programmed for. So that's the cohort we want to kind of get on our own platform and program and create very good premium content that's not objectionable, that people want to kind of associate with themselves. And that's the long-term vision for All Right TV.
Right. And before I let you go, how do you sort of see Rusk Media shaping the future of India's digital-first entertainment industry over the next 5 years?
To be honest, we are very patriotic as a team, and as personally I am. We really want to see us being the centerfold of India's pop culture revolution over the next 10, 15, 20 years. And not just within India, but taking Indian culture and also exporting it to as many geographies as possible. I see a lot of value, a lot of depth of stories, a lot of depth of creative talent that exists within India that we must use to kind of deploy globally.
All right. All right, Mayank, thank you so much for taking time out and being here with us on Startup Street. We wish you all the best going forward and a very happy Diwali.
Thank you. You too.
On that note, it is time for us to head into a short break. But coming up next, it's been 10 years since Cashfree entered India's fintech landscape. We check in with the firm's co-founder to discuss its path to profitability and plans to sustain growth. Stay tuned.
The growth, both how the industry has grown in the last 10 years and how we have grown as part of that industry.
Yeah.
Then again, I think the regulation bit, I think we today are a payment aggregator for both domestic, cross-border. We are also a
Welcome back. You're still with us on Startup Street. It's been 10 years since Cashfree entered India's fintech ecosystem, growing from a small payment startup into a major player in digital payments and API banking. As the company marks this milestone, it faces a challenging financial year, reporting a 14% widening of losses in FY25, alongside a revenue decline of 640 crore rupees, short of its 1,000 crore rupee target. My colleague Ritu Singh caught up with Riju Datta, the co-founder of Cashfree Payments, on the sidelines of the recently concluded Global FinTech Fest to discuss its path to profitability and how Cashfree plans to sustain growth in this rapidly changing fintech landscape. Take a look.
The growth, both how the industry has grown in the last 10 years and how we have grown as part of that industry. Then again, I think the regulation bit, I think we today are a payment aggregator for both domestic, cross-border. We are also a PPI holder. So just being a regulated entity and the governance that comes with it, and at the same time maintaining the DNA of innovation while balancing it out with compliance. I think that has been the journey, and I think as a part of it, we want to support the startups. So we're celebrating it by offering, discounting our pricing. We're now offering.
Oh, really?
Yeah. So we're now offering it at 1.6% for a year.
Okay.
And
to celebrate your 10-year milestone.
Yeah. So we kind of just wanted to gift the founders, the startup founders, because it means a lot. I think it's a few basis points, but it like maybe even if it's 1 lakh rupees or 10,000 rupees, it's a few extra months of runway for a founder. So that's a big deal.
Okay.
So yeah, that's how we're doing it. But largely, I think the growth that has happened, the learnings that come with the growth, and the learnings that come with regulation.
Yeah, well, it's been quite a journey, and congratulations again on completing your 10 years. But let's look at some of the financials, because for every fintech after scaling, the next question investors want to ask is your profitability, and your losses have widened. In your last reported numbers, they were seeing 154 crores. What is the path to turning profitable? How long before you do that?
Yeah, I think it's the idea is to continue to capture market share. I think we have been very focused on growing fast in the last 5 years or so.
Okay.
I think, and the results are showing. I think if you look at segments such as e-commerce, right? If you compare, we had a very good first quarter, right?
Okay.
So if you look at the numbers in e-commerce as compared to last year, the quarter-on-quarter growth is 61%. BFSI is 42%.
Yeah.
Cross-border is really doing well. It is 250%, right? And it is the high-margin segment of the business.
Yeah.
So I think the first half of the year has been pretty good, and I think we are on the path to profitability. And if we keep it up for another 2 quarters or so, I think we'll be pretty
in
close.
2 quarters. Okay. Speaking of high margin business, recently what we saw was that ban on real money gaming. What were your payment volumes there for that part of the business, and what sort of an impact has that ban had for a fintech like you?
Yeah, no, I think, see, we're a regulated entity, right?
Yeah.
And as a part of that, a lot of stringent due diligence has gone in, right? So our focus areas are, I think, e-commerce, cross-border, BFSI, travel and hospitality is pretty big, right? So I think it does not impact us, and I think the growth story remains pretty solid, because we look, as a company, we look to grow around 50-60% in a year, and I think we are on track, to get there.
Incidentally, the last time we spoke with Cashfree, there was this target of getting to 1,000 crores in revenues of FY25. I think now you've come in at about 640 crores, which is a good amount short, of that target. What really happened there, and when do you think you will get to that 1,000 crore mark?
Yeah, I think we're on track, because as of today, we have crossed. If you look at a monthly level, we are above that number. So I think this year, I think we should be able to.
So what will you end the year with now?
Something north of 1,000 is what we can say. I mean, let's look at the second half. I don't want to preempt things, but yeah, a lot of rate cuts have happened. The GST cuts have happened. So things looking up, I would say.
So what are you processing now? 80 billion annually at the moment, $80 billion, 800,000 businesses is what you're working with. At what pace will this grow? I mean, what will this translate into?
So I think, the good part is all the new businesses that start up in India, I think just look at the government data, around 25 to 30% of them sign up with Cashfree as of today. So that's a very good leading indicator of the kind of growth that we are seeing. So I think maybe in the future, in the next 3 or 4 years, we expect to have like a 20 to 25% market share in the market, which would be a very significant growth.
20 to 25 market share?
Yes.
In payments?
in payments, because if you look at the new entities that are coming in, around 25% of them do sign up with Cashfree. So yeah, maybe in the next 3 to 4 years, as these companies all become bigger, right, and those volumes will probably come to us, I think we'll be looking at 20 to 25% share of the market.
Let me quickly also ask you about the recent regulatory change in terms of payment aggregators. The final guidelines have now been released by the RBI. What kind of operational changes, if at all, will you have to make to be compliant?
Yeah. So the good part is it's made more digital and standardized. The key elements are around incorporating CKYC in the flow.
Yeah.
So we were doing similar flow. So it's not a big change, but it is a change, and we have time to comply with it
by December.
By December end, right? So I think that's something we've already started working on. But to answer your question, CKYC and video KYC, VSIP as it's called, has to be added into the flows.
Okay, let me finally conclude by asking you, you finished 10 years in the business. You said you're going to be profitable shortly. You're going to cross that 1,000 crore revenue mark. You seem to be hitting your mark. So is a public listing in the offing, and when would that be?
No, I think we are right now focused on market share, as I said, and I think maintaining that speed of innovation, right? Making sure we're ahead of the curve on payments. We have launched a lot of things at the GFF. So that's the focus, and I think IPO or going public is a matter of timing. I think we just want to be ready and then let the market decide, when the right time is. But focus remains on innovation and market share.
So no IPO plans on the horizon for now. All right, Riju, we'll leave it at that. Thank you so much for your time here today. It was a pleasure speaking with you.
It is Friday, and it's time to take stock of all of the week's startup action. According to Venture Intelligence, this week saw 26 deals worth $739 million. Some of the notable deals include quick commerce company Zepto, which raised $450 million from Avenir Growth, Lightspeed Ventures, Gladebrook Capital, Stepstone Group, Nexus Venture Partners, and others. Mobile entertainment platform Cuckoo FM got $85 million from GGV Capital, Vertex Crafton, IFC, and others. E-bus maker Ika Mobility raised a little over $56 million from NIIF. That's not all. Wealth tech company Deserve raised $40 million from Premji Invest, Accel, Elevation Capital, and Z47. And finally, prop tech startup House Easy got nearly $17 million from Axel India, Chirate Ventures, and Antler India. According to Venture Intelligence, this year has seen a total of 749 deals worth $7.5 billion. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.